Good morning, this is Sam Gurung from Beta 2 Limited, bringing you this morning's market report. Date today is the 24th of August 2015. Let me start by looking at equities. Well, uncertainty is the name of the game in equities at the moment. You might as well call it an equity bloodbath. It's down everywhere. To give you an idea, Chinese stocks are trading at its lowest level since 2007. Emerging economies at the lowest level since 2011. In Europe, German DAX is officially in a bear market at the moment, down 21% since April. In fact, closer to home, FTSE 100 is down 14% since April. We're seeing US equities down, and the reason for this is basically slowdown in China, and most importantly, moving forward, it's expected to deepen even further. Why are we seeing this? Well, we saw Chinese central bank intervene last week by devaluing Yuan. That was seen as insufficient by markets in general, and at the same time, the spillover effect of the slowdown in China to come into Western economy is also causing concerns for equity indices overall. So it has been a poor day and poor end to last week for equities overall, down everywhere. Now, it's not just by the equities as well. Commodities are down dramatically. In fact, the Bloomberg Commodity Index is trading at a 16-year low at the moment. Oil this morning fell below $45 a barrel for the first time since 2009. In fact, it's currently trading at $43, just above that. Raw materials are down immensely, and the reason for this is basically supply outweighing demand. And what doesn't help is basically the value of dollar still higher compared to where it was last year. So as commodities are traded in dollar is currently around 16% higher than where it was last year. It's basically making commodities more expensive. So on the back of that, equities down dramatically, commodities down dramatically, turmoil everywhere. Now, how does this impact our markets? Well, FX is different because obviously traded in pairs. So in regards to FX, they're both winners and losers, and obviously it depends on how good of a trader you are, and obviously in order to catch that. So, to touch in the FX arena, we are seeing currencies like Swiss franc, euro, and Japanese yen up. These are seen as safe haven, low yielding currencies, and they are being bought on back of obviously the rout we're seeing in emerging markets. The losers are the commodity currencies. Australian dollar, New Zealand dollar, Canadian dollar. They are down dramatically on back of obviously the uncertainties we've seen in China, and these obviously countries being commodity exporters to China. We're also seeing a bit of weakness in the dollar at the moment. That's more of a fundamental play. Well, the initial expectation over the last few weeks was an interest rate hike in September by the Fed. Now that's been also pushed back more towards end of this year. This was also on back of the minutes we saw last week. But at the same time, what Fed has said is basically they want to see improvement in labor market and housing market in order for them to obviously increase interest rate. But at the same time, China and oil are two major concerns for them. Well, since their last speech, both oil has been down, and most importantly, uncertainty in China has increased even further. So the probability of interest rate hike in September has gone down from 50% last week to 28%. So therefore, on back of that, dollar is down against the euro, against the pound, against the Swiss franc, and the Japanese yen. Again, that's obviously the overview in regards to what's happening in the currency markets. Now, moving forward this week, we could see volatility for dollar continue. We've got a meeting by Fed at Jackson Hole this week, where academics, Federal Reserve, policymakers will be coming together, talking. So markets will be keeping a keen eye on that. And we also have key data coming out, for example, GDP figures in the UK, in the US. We've got Q's central bankers speaking in Australia, Canada this week as well. Again, that could impact the currency markets in general. But for now, that's it. Uncertainties in the equity markets potentially to continue. Most importantly, opportunities in the FX markets to remain in there as well. Thank you very much for listening today, and I'll see you again.